So this is the answer for homework number 3 for Warrior Trading. I'm gonna go through the homework and the quiz, and here are the answers. So the first one is what is the right type of stock to trade? So the right type of stock to trade is the one that's gonna have a float under 10 million shares, or preferably under 20 million shares. Um, with low float creates um, um, and high demand creates that move in price. So you're gonna desire those shares that have low float. Question number 2: which price range is desirable for account growth? So Ross likes to target stocks in the $1 to $10 range. Um, he views that stocks in those ranges are not really focused on by the high frequency trading algorithms and systems that are out there that have unlimited resources and funds that can kind of manipulate price. So you'll find that most retail traders are in that 150 to $10 range. Which price range is desirable for conservative trading? So for conservative trading, um, mid caps and large caps priced above $20 per share are um, desirable for conservative trading. Ross does have his scanners set to, I believe, 100 for those gappers, and but he doesn't. He likes to see it appear on a scanner, but he generally does not trade above $20 per share. What causes stocks to be extreme? So there's an imbalance between supply and demand. This is the result of fundamental news or technical breakouts combined with limited supply. So sometimes stocks will have large floats, can be extreme if they have extremely powerful news. So that'll move stocks. What is your process for creating a watch list every day? So he says every day he opens up his gap scanner from Trade Ideas, and this gap scanner will identify stocks that have gapped up. So what are stocks that gap up? That have gapped up are those that from the previous day's close have risen in price to the open and have created a gap. So those usually come across the scanner. From there, he generally also prefers seeing stocks with high relative volume. So stocks that are up 5%, that will incur more people to more traders to be looking at those stocks. So high relative volume and those gappers are the first few things he does to identify stocks. From there, he also looks at news catalysts, what's going on in the news, volume spikes. So he has a minimum volume threshold to see, if these stocks are up in volume. That's generally indicates that traders are observing those stocks. And also low float. He's looking for stocks that are again under 10 million shares, and preferably under 20 million. And also a strong daily chart. So if there's a strong daily chart, so what's a strong daily chart? Any stock that's up above its 200 exponential moving average is one that's more highly desired. If it's below the 200 exponential moving average, um, then you have ceilings or resistance levels of resistance. The indicators he uses are the 200 moving exponential, the 50, the 20, and the 9. And if it's below that 200 moving average, it's generally not considered a strong daily chart, but he'll trade it. So those are just some few things he uses to build his watch list. The next question is, what is an example of the type of news that we wouldn't trade? So one example of news that we wouldn't typically trade would be a buyout. When a stock is bought out, the price is fixed and the stock rarely moves. In contrast, a headline such as a really positive clinical study, earnings, or activist investor taking a stage, large contract orders would all be headlines worth trading. Another one he doesn't mention here is stock splits. And he says he typically does not trade stock splits because that increases the float. And when you increase the float, you create more of a supply. And without low float, you don't really get that much of price movement. Next question is um, he wants to review this chart for me. Would you consider the chart below to be a good pre-market? So let me show you the chart he has here. Switch on. So this is his little. So this is the question right here. Instead of having you email me, I want you to review this chart for me, and tell me would this be considered a good pre-market chart or a bad pre-market chart? So we see here the black section here, it's kind of a gray section here is where the market ended, and this is non-trading hours. So you see it was flat and then it gapped up and it's above, looks like it's above its moving averages. This would be considered a good stock to put on its watch list because there's just pre-market volume and it's above those levels of resistance or support. And then the next question is review this stock for me. Also going back, also look at the volume. We're seeing high volume pre-market, so that's a very good indicator of a good stock to watch. This one right here will probably not be a stock to watch, even though it's up and it seems to be trending a little bit above the moving averages. It dips below right before it opens. Also look at the volume. The volume is very low. So he probably would monitor it, but he probably would not trade it just because those indicators are not there as far as what's going on. He probably would go back and look at the news to see why this had so much volume before it closed, and potentially watch it throughout the day, but nothing he would probably trade. So the next, and then moves into a quiz. So I'll answer those quiz questions. Oops. Answer those quiz questions. Doing this from my phone, so bear with me. All right, so from the phone. All right, so the next one is the quiz questions. Let me get to the email. This is for part 3. So how many technical characteristics must a stock have to be worth trading? The correct answer is 3. So generally speaking, he wants a stock with at least 3 technical characteristics to be worth trading. That means he wants to see high relative volume, he wants to see spiking volume at or around the time of entry, no resistance on the daily chart, so a good daily chart, and ideally fundamental news. Sometimes the stock doesn't meet every single characteristic, but if it has at least 3, then it's worth trading. So again, going back to his kind of a 6 criteria: high relative volume. Is it a former runner? Meaning, in previous time history, did that stock show any potential for going up? Maybe 20-30%. That might be one you might add to your watch list because you can see the profit potential. Volume spikes, as he mentioned, low float, and a catalyst. You need some type of news. Those are the criteria he uses, and he's saying here at least 3 of those characteristics he needs for momentum and gap and go strategies. Next question is, Trader A says that by trading stocks with high relative volume, we ensure that thousands of other day traders are also trading these same stocks. Trader B says that high relative volume is not the result of news catalyst, but always the result of a technical breakout. Who is correct? So going back here, Trader A says that trading stocks with high relative volume will ensure thousands of other traders are also. That's true. Trader B says that high relative volume is not the result of a news catalyst, but always Okay, that's obviously not the correct answer. So the answer is A. So trader A is correct when he says that trading stocks with high relative volume ensures that thousands of other traders are trading that same stock. So high relative volume basically means if you look at the volume patterns of a particular stock, if a stock is up, generally he says 5% in volume, then that's going to be worth watching. If the stock doesn't have volume, then it's not going to move enough for you to capitalize off of it. So we're looking for the high relative volume in those stocks. That's very important. The next question. Trader A says that trading low volume stocks is asking for trouble. That's true. Trader B says that low volume stocks are more likely to be manipulated by a number of traders or high frequency traders. Who's correct? I would probably say that A is correct. And he says both A and B are correct. Okay, so both trader A and B are correct. That is why we only trade stocks with a high relative volume. So yes, low volume stocks is asking for trouble. And then low volume stocks are more likely to be manipulated by a small number of traders or high frequency traders. So yes, so you're you're gonna want to always look for stocks that have high relative volume at all times, and just avoid low volume stocks. That's the point. It's simple on that one. So the next question, a follow through day is considered a breakout day, the day after a huge move, when a stock makes a new high, whenever a day has momentum. The correct answer is B, the day after a huge move. So a follow through day is the day after the stock makes a huge move. Typically, on a follow through day, the next day, you'll see it reach those highs again potentially. So he says here, as active traders, a follow through day is considered the day after a huge move. On follow through day, we want to see the stock break the previous day's high, although we don't always get that clean breakout. So that's what a follow through day is. What is a stock buyback? A stock buyback is buying back stock on a short trade. No. Buying stock to go long? No. A company repurchasing a portion of its outstanding shares to increase value? Yes. A purchase of stock by an activist investor. So the answer is C. At any time, a company can perform a share buyback program to repurchase outstanding shares that they sold on the open market. And that's generally a good thing if they buy back, because that reduces the float, and that it increases the likelihood that price moves. Next question. What describes an activist investor? An active day trader, an individual or group elected to a board of directors, a well-known individual investor who purchases a large quantities of stock in the open market. That's the answer. Or an investor that solely goes long. So the answer is C. Activist investor is an individual investor with large amount of money to buy a large stake of a company on the open market. Once the investor has acquired the position, he or she will try to get a seat on the board of directors and petition changes in that a company will increase the value. So sometimes they will petition for a sale of the company. Any improvements will benefit their stake. So that was the homework for chapter 3. I hope you got some benefit out of those questions. I'm going to be going through each chapter, and I'll see you again. Thank you.